And with that, let's get started on Chainlink Live. Hey everybody, welcome to Chainlink Live. My name is Andy Boyan from Chainlink Labs, and I'm here to talk to Benchmark Protocol. I've got Kurt Uhler and David Mass from Benchmark. Hey guys, welcome. How you doing?
Hey, we're doing well. Thanks again for having us on.
You're absolutely welcome. It's my pleasure. We were just talking before the cut a little bit about financial markets, traditional markets, and how they're seeing DeFi and the opportunity in the macro system and everything. But let's start with Benchmark itself, because you guys are kind of a gateway from the traditional finance world. You're at least speaking the same language as a lot of these institutions and investors. What is Benchmark? How does it work? What kind of makes it unique?
Yeah, sure. I'll start. We'll have to kind of play off each other here since there's three of us. But Benchmark protocol is a DeFi protocol. It connects traditional financial markets to DeFi markets, and it's built on the Ethereum blockchain. It's a rules-based, and this is going to sound a little bit like word salad, so we'll break it down. But it's a rules-based, non-dilutive, supply elastic currency that can also be used as a hedging device. Traditional collateral within DeFi lending has primarily been Ethereum or stablecoins, and our product as a supply elastic currency is a new form of collateral in the space. And ultimately, our goal is for the MARK token to be a stablecoin alternative. So when users trade out of coins or use stable coins for denominating contracts, whether it's lending or anything else, we think we can take some of that market share and put that into elastic currencies. So that's what we're looking to do. When I say supply elastic token, many users also call that a rebase token. So essentially, we alter our supply when our price is fluctuating around our peg. And we can, of course, get into more details as we get further along here. But the main features are that it's non-dilutive and supply elastic. So a non-dilutive asset means you always own your percentage of the market. When you acquire your percentage of our network, you will always own that percentage. You can never be diluted. Inflation is applied fairly to everyone, all holders. And yeah, that's essentially our platform.
Can you guys walk through elastic supply and how that works? I think when people first get into elastic supply, they're kind of shocked by suddenly getting more coins in their wallet or suddenly losing coins directly from their wallet. Is that how the MARK token is working? And explain why that's not actually a loss or a gain.
Yeah, sure. So a rebase. So our rebase occurs daily. So each day during trading hours, we will call an algorithm which will adjust the supply across all wallet holders. So essentially what happens is, and this is going to get into a little bit of or a lot of detail, but our token price is pegged to one SDR. So one SDR is approximately $1.42. And the SDR is based on a basket of 5 currencies, which consists of the dollar, the euro, the Chinese yuan, the Japanese yen, and the British pound. So that's our peg. So essentially, our token price will fluctuate around that peg if the algorithm's doing its job. So when the price is above that peg, we will adjust supply up, bringing the price down towards the peg. Or when the market price is below the peg, we will remove supply, adjusting the price up. There's another aspect of our rebase algorithm, which is a volatility index. And so essentially we utilize Chainlink to help us with pulling the data from that volatility index. It's called the VXX. It's an exchange traded note. And basically what we do there is if the market is showing increased volatility from the prior day, we use that to further increase the supply. So what that does is it essentially hedges fear and volatility in the market and prevents liquidation events. So a little bit in the background there, stable coins have certain issues relating to collateralization and the way they're kind of issued. And again, we can talk about that more in a minute. But what we do is we try to proactively adjust our supply to meet the demand. So whether that's raising it or decreasing the supply, when the demand changes, we want to be able to adjust very quickly to that and match our supply with the demand. And that's how you achieve the price stability or the sine wave around the peg. So back to your question, it's exactly what you said. Each day the wallets are adjusted. People will see a different number of tokens that they own in their wallet. And oftentimes if they haven't researched, they're kind of like, where'd my coins go? Or why do I have more tokens? And so that's why I've kind of noted it's education's a big topic for us. And we want to make sure everybody who buys our token or who wants to learn more about benchmark protocol has an outlet to do so.
So I've seen elastic supply. There's a few different ways I've seen where they'll just add supply or cut supply directly in the wallet. I've also seen protocols they'll like take a weighted average of the past 5 days or whatever it is, something in the past to say like, well, here's about what supply should be given historical trends. You guys are using the volatility index to look forward and say, given what the volatility just was, we expect this to happen in the next, is it a couple of days? Is it a week or what's sort of the time frame around there?
Yeah. And I'm sorry, I might have to mute a little bit more frequently. I have a dog and I know the theme has been, these Doge memes in the market. So
we're okay with physical dogs. We're good, right? We're good.
He's a COVID dog. He's a puppy. So bear with me. But yeah, it's really interesting. I mean, took a lot of work to get the data we were looking for. And because we really need to pinpoint exactly what would make our algorithm accurate, seamless, and really pick up data live on a daily basis. And that's exactly what we're doing. We're reacting to data in capital markets in real time, essentially, once per day. There's a slight lag and latency from our data. So technically, if we're rebasing today, we'll be picking up the VXX data from yesterday. So effectively, the benchmark protocol is picking up sentiment in the markets, not from a month out or from a month before, looking backwards. It's in real time, which is really important.
So if we look at Federal Reserve sorts of processes, they'll take a look at indicators over the course of a quarter and say, we're going to raise interest rates or not, or whatever their, metrics are. You guys can do it daily, basically, is we're going to find a way to adjust our monetary policy whenever as needed.
Yeah, essentially, we're picking up data from, it's a derivative from the volatility index, and they're short-term notes based off of the S&P 500. So any volatility that's occurring from those markets, U.S. capital markets, we're going to be taking that into account and adjusting our algorithm based on key numerics.
We're getting into the weeds. I love this. So if you have questions at any level, audience, This is Chainlink Live. Ask them now. But here's my question. So these are volatility from the S&P 500 short-term notes, you said. Yes. Are those correlated enough with crypto markets to kind of do what needs to be done? Or does that not matter? Because really you're looking around this SDR index, which is about these various fiat currencies.
Well, it's a two-pronged approach, which makes our algorithm quite interesting and pretty reactive. Yeah, I mean, when you look at capital markets, and then generally when you see more volatility in the markets, you'll see options prices creeping up. So let's say the S&P 500 is dropping pretty climatically. Usually, you'll see the cost of hedging it'll increase, and when there's more stability in the market, options will cost a little less money. So generally, we'll be adjusting our protocol when the S&P 500, for example, is falling. We'll be accounting for that in our algorithm by a supply adjustment upwards, which actually goes a long way in injecting liquidity and supply into the system.
Cool. Why SDR? So, a lot of stablecoin protocols, they're they're around $1 or €1, or I've seen some that there's an arbitrary one that they just pick the number, because why do you need a number if it's on Ethereum? So what is special about SDR that makes it a unique asset?
Yeah, so there's a couple of reasons why ours is, I think, a better peg than just a single.
Kurt, I'm going to cut you off. I think you're getting a lot of lag here. David, are you getting the same thing?
I am, yes. I could pick up that question. I mean, essentially, we're picking up the SDR for diversity in assets. We're not just looking at the US dollar, which accounts for basically 40% in our basket. We're also picking up 4 of the other global currencies in the world for baseline diversification. It's really important to us and how our algorithm works long term. We need a stable prong, basically for. I mean, basically, if we were just taking the US dollar, listen, it's a mature market, it's a first world country, it's not a developing country, but you need stable assets within a basket to operate. And the best way of doing that, in our opinion, is picking up 4 other alternatives within this basket. Mitigating risk is all about diversity, and I think we're doing that pretty well. So
by including more than just the US dollar, Chinese yuan, the euro, et cetera, like, does this open it up? Are economists and people in traditional finance, are they looking at this as like, this is a more globally accessible a stable coin for us because it's got a more stable peg because it's basically aggregating all these fiat?
Yeah, you hit the nail on the head. I mean, look at all the traders that are holding cryptocurrencies, buying crypto, speculators. It's not just the US. So I think if you're just picking up the US within an algo, you're omitting most of the market. So I think that's pretty important, long term at least.
Yeah, I mean, we're US based, and so I have a default to $1 just because I'm used to it.
Sure.
But I don't need, if I'm selling something to hold a position, I don't need it in $1. I just need it to stay put, whatever it is. Or if I'm collateralizing with something, it doesn't need to be at $1. It just needs to stay about the value that I expect. So that's a really interesting take there, and I really appreciate that you guys are coming at that a little bit more unique. What are I think we already talked a little bit about how you're using Chainlink. Kurt mentioned the SDR feed as well as the VXX feed with that. Do you have anything to add to that? Other elements of that integration?
Well, I can't talk to things that are in the pipeline, and we're working on other things. I just can't really allude to that right now. But the primary focus right now is picking up that VXX data, and we're only using it when capital markets are trading. So Monday through Friday, we'll be picking up that VXX data, applying it to our algorithm. But for now, that's really all I can talk about.
No problem. Well, I'm going to talk about something you have announced then. You guys haven't announced the Benchmark Protocol peer-to-peer cross-chain marketplace. That's a mouthful too, but let's pull out a couple. Benchmark says you guys cross-chain peer-to-peer marketplace. So what is this? What's how is it unique? What does Mark do in this ecosystem?
Yeah, we're really excited about it. Thanks for bringing that up. It's the first of its kind, I think, within the market. And you could call it just that. You could just call it marketplace. I think that's a little bit easier. But it's actually, it's a peer-to-peer lending platform. And initially, it's going to be launched on Ethereum. The launch is actually quite imminent. I'm not going to tie us down to a specific launch date. But we're also going to be rolling out the platform on another L1 when we go live. That will be another surprise in the pipeline. But it's a place where you could allow for lending contracts to be created by any user for any ERC20 token. You could probably hear the dog in the background, right?
Just all right, so the dog likes it. Can you say that last part again? Any ERC20 token?
Any ERC20 token, right. So it's not going to just be a sample size of the total token population. Any ERC20 token, which is huge from a utility perspective.
Yeah, that's really interesting. Given for a lot of lending markets, what is collateral and what can you borrow? That's it. That's your product match, and you're limited to what's gone down. But So that's a really interesting note right there. And so we're left with cross chain, and we've got a breadcrumb that it's L1. That's great, and we'll keep track of you guys and make sure we know what's going on with that in the future as well. I got a question from the audience. Hey, Keon, I'm going to call you that because that's how I can see it. And Keon has a question about South Africa. For someone in South Africa, does this mitigate volatility for assets pegged to the dollar? And I believe Keon is talking about using the SDR as the peg value.
Hey, Andy, can you hear me? It's my connection.
Yeah, it's still a little off.
Okay.
Can't win with us today. Got the dog barking in the background. Got some latency on Kurt's end.
My family's getting home from school. Like, it's a whole thing. It's all right.
Man, listen, I think you don't have. We're not covering every single currency within our global basket. I mean, that would be a great way to diversify risk, but we had to go with something that's popular, something that's been formidified throughout the years. Mm-hmm. That's why we went with the SDR and the 5 currencies within that basket. But I will tell you, from the viewpoint of mitigating your risk, you definitely want an SDR basket versus just something with single currency exposure.
Yeah. So if I'm a global trading desk and I've got assets and I want to, hold a position in cash, but if I'm trading globally, then I don't want to just keep it necessarily in a dollar. That's inefficient. Like then that net volatility pops up, as Keon mentions. So this is really like just a different stage of trading that I think a lot of crypto and DeFi isn't addressing yet. It's dollar or sometimes euro or yuan, and that's it. And it's not combined very well yet.
Well, yeah, I mean, when you look at the primary trading pairs, at least from a stablecoin perspective, you're looking at USDT, USDC, and then the dominant movers within the market like Bitcoin and Ethereum. So I think the market is just totally overlooking, some of these alternatives, which I think will probably be moving the needle in the future as some of these markets progress and they're more mature. More to come on that, in my opinion.
Great question. Thank you.
Yeah.
So you guys you too, and I assume more of your team come from the traditional finance world. You're clearly positioned to speak to hedge funds and investment desks that are in these markets that speak these terms. How are institutional investors or like the people that you're talking to, how are they reacting to DeFi? Like, do they get it? Are they degen? They're just not ready to go. I think we talked about this at the beginning, but let's come back to this again. What are their general thoughts or questions about DeFi or benchmark specifically, if you don't mind?
Yeah, I think it's a really interesting topic, right? Because you see all these net inflows coming into the market and where the net inflows going. So you see Bitcoin dominance trickling down, more money moving to Ethereum, and then a lot of the DeFi protocols, right? So institutions are they're in a very interesting pocket right now because the regulatory landscape is very gray, and there's a little bit more clarity that's been coming out from a global perspective and even local law domestically. But they're starting to dip their toes and get a little bit more comfortable with the bigger primitive assets like Bitcoin and Ethereum, which in my mind lays out the ultimate roadmap for more speculative assets, which in our eyes, like, you look at the top 100 from a CMC perspective, you see some of the top DeFi protocols, they're mature assets within crypto, but not from an outsider's perspective. Right. So I think ultimately you'll see more inflows to some of these assets with lower market caps.
Kurt, do you want to try again? I don't know if your stream has fixed.
Is it better?
A little.
Okay. Well, cut me off if it's too distracting. I mean, I think from our perspective, the lending marketplace is going to be a good way to introduce our product to people that come from the traditional finance world. People understand lending, they understand loans, they understand interest rates, and I think that when we can package that with our protocol, it's more digestible, I think, for somebody that's not totally into the rebases and farming and yield optimization strategies and things like that. So I think that that will help. And our token will be part of the ecosystem, and users will be incentivized to use our token within the lending marketplace. So we think that it's really a proving ground for this, what we like to call EFI, or elastic finance space, where the whole purpose of an elastic supply token is to hold value over a period of time, not be inflated, right? Stablecoin counterparts, they're tied to their fiat counterpart, I should say, and they inflate in the same way, right? One USDT, right, is always worth $1. So if $1 has less purchasing power, then so too does its digital counterpart. Mm-hmm. And I think that's what we're trying to avoid, and we're trying to show that a supply elastic currency holds its value and can be used in a lending context. And we think that's pretty important to push forward this space as a whole.
Yeah, really interesting perspective on just what markets you're speaking to, what language you're speaking to, and how they understand what they can do. We're getting a bunch of questions now, so let's hit a couple of good user questions before we wrap up today. If you're joining us late, this is Chainlink Live. We're talking to Benchmark Protocol, and my name is Andy Boyan with Chainlink Labs. We'll start with a roadmap question. Any news regarding the launch of dual farming initiative on ETH network? I don't know what that means. It sounds like somebody who's been in your Discord and knows what's up. Can you comment on this at all?
Yeah, so this is something we've been working on behind the scenes. No announcement yet for when this will happen. But essentially, we've come up with a new way to reward farmers, and it involves partnering with other projects, and it's something that we're looking to integrate into our interface at some point in the next few months. And maybe that's a good question that I could show our interface a little bit here, if that makes sense.
Yeah, absolutely.
That would now be a good time to do that.
Yeah, let's see what you guys got.
All right, I'm going to click share screen. Let's see here. All right, so I'm going to show. This is the press, right? So this is where.
One second, we're still loading here.
Okay.
There we go. All right, looking good. Go for it.
All right, so this is what we call the press, which is essentially a section of our protocol where users can stake liquidity tokens and earn yield. So you can see some of our pools here, showing off our pretty high APYs of 300+% for Uniswap pools. So users can stake LP tokens here, earn mark rewards. We also have a single asset staking platform where users can stake their mark tokens and earn a reward token, which is called XMark. XMark is essentially, if you're familiar with XSushi, essentially just a receipt of doing. So it tells you that you staked your mark and you've earned XMark. You can return it at any time based on an exchange ratio here. But what's interesting about XMark is it's not a rebase token, and it goes cross-chain. So we have XMark pools on Binance Smart Chain and on Polygon, so users can also earn yield across chain if they wish to do that. And we also have a couple balancer pools on ETH as well, which are here. So yeah, that's really our staking and LP platform. So
your liquidity is cross-chain on Uniswap, on Balancer, on BSC, and on Polygon. But then the core rebase action is on ETH, but moving to another L1 sometime soon.
So the rebase will always happen on ETH because it has to happen in the native AMM. But that's why we created this XMark token to go cross-chain, because it essentially represents a pool of mark tokens. So the underlying assets will rebase, but the number of XMark that you own will always be constant. So it'll function more like a traditional coin, but that's why it's easier to integrate cross-chain, because it doesn't rely on the rebase mechanism going cross-chain.
Cool.
Yeah.
I don't know if you had more to share. Not it wasn't coming up. So if you have another screen to share, try turning your video off. Somebody in I don't know if you can turn the video off, and then we can leave your sound on, and maybe we can just have you as an avatar. Sometimes that'll
Sure.
improve it. But if you got another screen you want to share, go ahead and bring that up. In the meantime, I'm going to bring up a question for David. Can you guys talk about the difference? Fudbuster asks, great name. Can you guys talk about the difference between holding mark and holding mark denominated debt for users that are more novice, or for anybody? Because I'm not novice, but I don't know exactly what he means. I'd love to hear this explanation.
Yeah, I think this is more relating to the release of our marketplace. And yeah, we have plans to incentivize the use of the mark token within the marketplace. We haven't really talked about utility before, granularly when you're talking about mark and the integration with the marketplace. I don't really want to get too much into the details with denominated debt. I think it's going to potentially go over a lot of the viewers' heads. But I do want to quickly touch base on utility. So, for example, as I said, mark holders, if they're actually going to be transacting on the marketplace, they're going to be able to actually have reduced transaction fees and other yield-generating opportunities for the mark token. And that's actually going to probably be the collection of other fees on the marketplace, which will probably move the needle. We actually do have a big announcement related to the overall functionality of the marketplace in the pipeline, and we're still ironing out some of the details. So for any users that are watching this video, just pay attention to some of the news.
We get a little alpha on Chainlink Live sometimes. I think that might tie into another question that popped up here. Will you guys use gas optimized bridges? You mentioned like there's some perks and benefits basically to using this token. Does this relate to this question?
Yeah, I mean, so basically, if we're going to be launching the peer-to-peer marketplace on other L1s, gas optimized bridges. For example, if we were going to, I see the question is about Polygon. If we were going to use Polygon, any transactions on the bridge would have to go through the Matic bridge, would be subject to those fees. But we've already announced Binance Smart Chain and a couple other hot places for the marketplace. You could think about the marketplace as an Aave with a ton of assets, not just on Polygon or Ethereum. So you could see the breadth of the exposure that we'll potentially get.
Awesome. Thank you, guys. And thank you for all these questions. They're great. You guys are clearly paying attention here. I've got one more question for you, David, from Marvin. Before we wrap this up, what kind of dog you got?
That's the most pertinent question, probably. He's a Labrador, and he's very vocal. I still love him, though.
High energy, man. You need COVID to keep you fit, right?
Yeah, for sure.
We got a COVID hamster. So,
for
you
sure.
know. All right. Well, guys, this has been great. Before we go, I want to give you a chance. What's the best place for our audience, future audience who watch this on YouTube later? Where can they find you guys and more about Benchmark? What's the main place? Some people are Telegram, some people are Discord, some people are Equal. Like, where do we go to get involved?
Sure. For news-related items, you can follow our Twitter. What is our exact Twitter handle? It's
benchmark_. Yeah,
I should probably know that, right? We have a really active community on Telegram. We also have a Discord, but education is key, and a lot of our users pay close attention to the news and how our algorithm works. Telegram is the best place to interact with fellow mark holders.
That's fantastic. I want to encourage everybody who's watching, join communities. That's how to succeed in DeFi. That's how you get started. If you want to eventually make a career transition, that's how to learn about these protocols, how to use them, how to find out more. So join the Benchmark Telegram and Discord. Follow them on Twitter. Join the Chainlink Discord and Telegram, and follow us on Twitter, of course. Please, everyone, I want you to like and subscribe to this channel too. Help me out, because we do these Q&As pretty frequently. I got another one tomorrow at the same time with all sorts of interesting projects where I love it. I just get to learn about Benchmark and now SDR. Like, I'm just exposed to all sorts of really cool new things. David and Kurt, thank you so much for being here with me. I really appreciate you taking the time.
Thank you, Andy.
Thank you. It was a pleasure.
Oh, absolutely mine. To our audience, thank you again for being here. Like and subscribe. Thanks to Juan for hanging out with me in the chats. And everybody, we'll see you next time on Chainlink Live.